one stock which is also up almost 5 to 6% and is locked in upper circuit is Talbros Automotive. One of the fresh brokerages have come out and they are quite positive on the counter with an upside of almost 36% on the stock, and they're banking on the fact that the company is likely to double the top line by FY27, and that will come with improvement in margins by almost 100 to 200 basis points. Let's pose this question to Mr. Navin Juneja. He's a director and group CFO joining us from Tal Bros. Hi, Mr. Juneja. Good to be speaking with you. That's exactly the first question. I think you've laid out a path of doubling your revenue by FY27, but what are the levers available and how exactly do you plan to achieve that?
Good afternoon, and thank you for having me on the show. As regards our target of doubling our top line is already we announced last year that we'll be doubling our top line by 27. And you can see in this year, current year, in the 9 months, we are already up by 22%. And I see the same momentum will continue in the next financial year also. On the bottom line, we have EBITDA has grown up by, during the 9 months, it has grown by around 40%, and the bottom line has grown up by 56%. I hope the main levers are our forging division, which is already we are exports basically in our forging division. Fresh orders which we have received during the last financial year, 22-23 and 23-24, around 2,000 crore plus over a period of which will be being implemented over a period of next 5 years. Out of it, major is from the EV sector, and export is also contributing 50% in that. And I think the conversion already started. The major upswing will come from 25 when the EV vehicle manufacturers will start their production on the European front.
Right.
So these are the major levers. Plus, my joint ventures are also growing double digits in this, expecting to do that.
Sure.
These are major.
Sure, Mr. Juneja, point taken. But what is the likelihood that you'll be able to achieve this target ahead of your own guidance? And will it actually come with a margin expansion as well? Because exports, I believe, are accruing you higher margins and the share of exports is likely to increase, right?
Yes, you are absolutely right. We are targeting at present, my export is around 25% on the total group level. We are expecting to grow up to about 35%. And of course, we are expecting the margin will go up further. During the 9 months, my margin is around 16% EBITDA margin, and we expect that minimum we should be around 1 or 2%. It should go up by 27. It should be there.
So, Mr. Juneja, how are these 2% kind of improvement in margins coming on the back of?
First, volume of scale benefit is always there. The fixed cost doesn't go to that extent. Plus, my export contribution, which has a better margin as compared to domestic, which is always there. And these are the 2 levers which we think will improve our EBITDA margin. Okay. And during the current year, you can also see my EBITDA margin has grown approximately as compared to last year. It has gone up by more than 1%.
Sure. So 16% order will move to 18% on the back of improved product mix and higher base. Talk to us about what.
I never expect that, but it should be.
Sure. Mr. Juneja, what kind of capacities are you operating on right now?
It depends on business to business. On the gasket adhesion front, we are about 85 to 90%. On the forging front, it's 90% plus. And on the JV of mainly, it's around 85%. On the Margo, it's around 90%. These are my capacities. Of course, we are putting money in CAPEXs. And during the current year, we are already put about 60 crores in the CAPEXs for the next financial year. And we hope the same momentum will continue next year also.
Okay, fair points. Because you are kind of nearing and that highest capacity utilization and improved order book would mean that unless you have extra capacities in place, you'll miss out on
absolutely. We are already in the process of doing that.
Mr. Juneja, I also wanted to put the spotlight on some of your new age products, the biofuel hoses, the EV portfolio that you have. What part of the business is actually coming in from these new age products, and what else is in the anvil on the research and development stage right now?
Yeah, first of all, biofuel hoses, we have got a joint venture, Margo Rubber, and it's growing in a very fast pace. In fact, the volume has gone double, and the sale value is approximately 2.5 times as compared to the conventional hoses. On the other front, we are already EV front. We have got on the gasket side and the heat shield side, we have got the heat shield business of of batteries, which because battery generate heat and the heat sheet will protect the other components in that. Plus we have got gaskets for our motor, EV motor. And on the suspension side, we have got the suspension business of the EV vehicles. And we are already there in Tata Motor, 100% we are supplying. Plus we already got the overseas, huge overseas order for that component, which will be start implemented from next financial year.
Last question before I let you go, Mr. Juneja. Your ROCE right now is sub 14%. Given the capex that you are undertaking, do you expect the ROCEs to remain stagnant around this mark, or with the improvement in margins, there is going to be an improvement in ROCEs as well? And if yes, what's the level to watch out for a couple of years out?
Of course, there will be improvement in ROCEs, of course, will be there, of course, but the CAPEX will be there. It not be initial 1 or 2 years, it will be nominal increase, but going forward, it will be around 20% our target. We'll achieve that. And I'm quite confident by 27, we'll achieve 20%.
So confident about 20% ROCEs by FY27. On that note, sir, we let you go. Appreciate you making time and speaking with ET Now.